Hi, my name is Jennifer, and I want to help you live your best life. Take a step back. Move away for a second from whatever problem you're facing, whatever thought is plaguing your mind, whatever constant worry you seem to be carrying around. Stop it all and redirect your mind for a minute. Do you know how big the universe is? Astronomers today believe there are around 140 billion galaxies in the visible universe. To put this into perspective, if these 140 billion galaxies were frozen peas, there'd be enough to fill a large auditorium. That's a big universe. Now, think of what's worrying you in proportion to that. Doesn't seem so big after all, does it? And that's only what we know so far. Coming back down to earth, when it comes to your investments and your financial life, how do you face the fears you have there? What are you scared of? A market crash? Not having enough money to invest? Not knowing who to trust? Or maybe you don't know how to start? In this video, I'm going to address some of these questions, and hopefully we'll be able to break through some of the fears you might have. Let's go. How should you face your fears? First, let's size them up. Are you worried that a crash might be coming? That you'll lose money? Let me flip the meaning of a crash over on its head for you. The way you should see a crash is as an opportunity. If you're investing for the long term, you shouldn't care about the temporary nosedives. On the contrary, you should welcome them. These are opportunities for you to buy whatever you're buying on sale, and thus increasing your returns. Look past the crashes. The market sooner or later recovers. What about making a mistake or dealing with market volatility? The best way to calm your fears is by setting up a strategy. You can do this by planning for the worst case scenario. How? One way could be the way you build your portfolio. First, what is a portfolio? A portfolio is a collection of your financial investments. Things that go in here could be stocks, bonds, commodities, cash, real estate, or even art. So what should you put in yours? And how do you know what and how to pick? Ever heard the saying, don't put all your eggs in one basket? Well, this applies here in the form of diversification. Diversification reduces risk. Why? When you spread your investments across different assets, industries, and categories, you're more protected. Because each section will react differently based on a certain event. Individually, each asset may have massive drawdowns at one point or another. However, together, they become dependable. When you're building your portfolio, you want to look at it as a whole, and not just at the individual assets that make it up. Technically, you can build your portfolio however and with whatever you want. What you need to consider though are your risk tolerance, your time horizon, and your investment objectives when assembling and adjusting your portfolio. Once you set your target asset allocation and invest based on that breakdown, the next step is to rebalance your portfolio as time passes by. Let's look at an example. Say you've picked a target allocation of 50% stocks and 50% bonds. After a period of time, let's say that the stocks performed well. So now the allocation becomes 70% stocks and 30% bonds because the stocks grew faster. So what you want to do is bring your portfolio back to your original allocation. So you either sell some of your stocks and buy more bonds to balance the weighting out, or if you don't want to sell and just want to add more capital, you can buy more bonds until you reach your original target allocation of 50-50. There is no specific time when you need to rebalance your portfolio, but you can follow one of these strategies. Either do a calendar rebalancing, which involves analyzing your portfolio at certain time intervals. This could be monthly, quarterly, or yearly. Or you could follow the constant mix strategy. Here, every asset is given a target weight plus a tolerance range. So, as per our example, let's say we give each asset a plus or minus 5% range. So if my stocks move from 50% to 60%, we've moved outside of the allowable band. So it's time to rebalance the entire portfolio. Another reason to rebalance is if your risk level has changed. Let's say you're still young and have decided to invest aggressively since you have time to build up funds and have more years to recover if anything goes south. But once you approach your retirement years, you want to rebalance to a portfolio that is more steady and reliable. So let's say instead of having a 50-50 target allocation, you change your target to be 20% stocks and 80% bonds. When you pick a strategy and stick to it, things will start to move more or less on autopilot with a plan in place. And the more you understand what you're doing and what is happening around you, the easier it will be to not get emotional and not make bad decisions, like selling when things are low. What else are you afraid of? Not having enough money to invest? Like I said in my earlier video, you can start small and you can start now. Do you not know who to trust? Make sure you're seeking valuable, trustworthy information to make your investment decisions. Definitely learn the basics so you can spot the signs in case you're being scammed. Don't know where to start? Start here. Read books, search articles, or listen to podcasts. There is a wealth of information out there, and it's all easily accessible. The first step to overcoming your fears is getting started. Combat your fear with knowledge and start small. You'll learn through experience. And if the strategy you picked isn't working for you, you can always refine it. Take a step back and look at the big picture. The trick is to detach and always remember the important things in life. If you enjoyed this video, please hit the like button. And if you'd like to see more, please subscribe to the channel. Thank you for watching and have a great day.